Hello and welcome. In today's video, we're diving into a fascinating and important trend in the crypto world. XRP is disappearing from exchanges. Over the past year, billions of XRP, the cryptocurrency of the Ripple network, have been quietly withdrawn from trading platforms. Exchange balances of XRP have plunged to their lowest levels in 8 years, leaving many people asking, where is all the XRP going and why does it matter? In this video, we'll break down recent data on XRP's vanishing act, explore the potential causes, from whales and long-term holders to regulatory twists and strategic moves, and discuss the consequences for XRP's price, liquidity, and volatility. Whether you're new to crypto or a seasoned XRP holder, we'll explain everything in clear, simple terms. So, let's get started. XRP is vanishing by the numbers. Let's start with the facts. Recent on-chain data shows a steep drop in XRP held on cryptocurrency exchanges. By late 2025, balances fell to levels last seen in 2018. Just months earlier, around October 2025, roughly 3.7 to 4 billion XRP were sitting on exchanges. By late December, that stockpile was about 1.6 billion XRP. In other words, XRP held on exchanges plunged nearly 60% in under half a year. To put it another way, over half of the XRP that was available for trading on exchanges has been pulled off. Major platforms like Binance saw their XRP reserves fall off a cliff from a peak of around 3.5 billion XRP in early fall 2025 down to roughly 2.6 billion by mid-December. This trend has sent XRP exchange balances to an 8-year low. It's as if XRP is doing a disappearing act from the open markets. Why is this significant? Coins held on exchanges are the liquid supply readily available for buying and selling. When that supply shrinks, it can indicate that owners are moving their XRP into private wallets or custodial storage, essentially taking them out of circulation, at least temporarily. This has sparked a lot of buzz in the XRP community. Some enthusiasts are excited, saying tight supply means the price could moon. The idea being that if there are fewer coins available to sell, it could create a supply shock that sends prices soaring. But is it really that simple? Before we jump to conclusions, let's examine why this is happening. There isn't a single reason behind XRP's vanishing act, it's a combination of factors. Let's break down the main causes. First, whale accumulation. Whales, or large crypto holders, have been gobbling up XRP and moving it off exchanges. On-chain data shows hundreds of millions of XRP were withdrawn to cold storage and custodial vaults in late 2025. This suggests big players are stockpiling XRP for the long term, not looking to sell. When whales accumulate, they remove liquidity from exchanges, contributing to the disappearing supply. Second, long-term holders are following suit, adopting the mantra, not your keys, not your coins. More everyday investors are moving XRP into private hardware wallets. This signals strong belief in XRP's future value and a commitment to holding, which naturally reduces the amount of XRP floating on exchanges for sale. Third, institutional inflows. The rise of XRP exchange-traded funds, or ETFs, is another major factor. In 2025 alone, over $1 billion flowed into these products. When an ETF buys XRP, those coins are locked away in regulated custody accounts, taking them out of the circulating supply on exchanges and signaling growing comfort from big money players. Finally, regulatory factors. While legal clarity in the US has improved, the memory of past exchange delistings has made some holders cautious, preferring to keep their XRP in private wallets. Plus, Ripple's own strategy of locking up large amounts of XRP in escrow also limits the supply hitting the market. So, what does this vanishing supply mean for XRP's price? The consequences are a mix of bullish potential and new risks. First, the bullish case, reduced selling pressure. With fewer XRP on exchanges, there are fewer coins available to be sold. Much of this supply has moved into the hands of long-term believers and institutions who aren't looking for a quick sale. With sellers on the sidelines, even a modest increase in demand could push the price up more easily. However, the flip side is thinner liquidity. Fewer coins on exchanges mean the market becomes more sensitive. Large buy or sell orders can cause more dramatic price swings, leading to higher volatility. A big purchase could spike the price, while a large sale could cause a sharper drop. This sets the stage for a potential supply shock. If a wave of new demand hits from positive news or a market bull run, buyers will find very little XRP available. This scarcity could force buyers to bid the price up rapidly, but there's a crucial catch. Low supply means nothing without demand. If buying interest remains weak, the price can still drift lower, even with coins leaving exchanges. The low supply is like a coiled spring. It needs a spark of demand to actually pop. What do the experts say about all this? There's plenty of analysis, but a few key insights stand out. First, analysts agree that with less XRP on exchanges, the market has become thinner and far more reactive. If a big buyer comes in, there's less supply to absorb the demand, meaning prices could move quickly. It amplifies whatever market forces are at play. Second, experts are watching whale behavior to see if this is bullish accumulation. Metrics like coin days destroyed, which spike when long-term holders sell, have remained low. This suggests the big players who have held XRP for a long time are not selling. Instead, the data points towards accumulation, with whales positioning themselves for a potential future breakout. Finally, some analysts urge caution about the data. While some datasets show a dramatic drop in exchange supply, others that track a wider range of global exchanges find the total amount of XRP is still significantly higher. This suggests that while the downward trend is real, we shouldn't overhype the scarcity just yet. The key takeaway from experts is to watch the trend, not just one absolute number. So, what's the bottom line of XRP's great disappearing act from exchanges? It's a story of evolving market dynamics. On one hand, whales and true believers are stashing their XRP away, signaling confidence and drastically cutting down the readily available supply. Institutional interest via ETFs and custodians has introduced a new era where big chunks of XRP are locked up out of reach, which could be a game changer for future price action. On the other hand, reduced supply hasn't translated into a price explosion, at least not yet. It has mainly made the market more sensitive. With fewer coins floating around, XRP is primed for larger moves, up or down, when the next wave of significant trading hits. For XRP holders and crypto enthusiasts, there are a few takeaways. If you're bullish on XRP, the disappearance of coins from exchanges can be seen as a positive sign that strong hands are in control, and a big supply squeeze could be around the corner when demand kicks in. However, don't bank on automatic gains. Watch those demand signals, keep an eye on news that could bring in buyers, and be aware that prices could still pull back if the broader market struggles. The current low supply might cushion XRP against extreme dumps since there's less selling pressure, but it also means any remaining large seller can have an outsized impact due to thinner order books. In plain terms, XRP's liquidity is drying up, and that's a double-edged sword. It sets the stage for potentially explosive growth, but only if new or existing investors decide to pounce. Until then, XRP might trade in a tighter range, waiting for that catalyst. The scenario is truly intriguing, almost like a suspense story for XRP fans. Will the whale's big bet pay off with a soaring price in the coming months, or will the market drift and force some of those holders to bring coins back to exchanges? One thing is certain, this trend highlights how the crypto market is maturing. Exchange metrics, on-chain data, and investor behavior all intertwine to influence price. By understanding these patterns, like why XRP is disappearing from exchanges, you're better equipped to anticipate what might happen next. Thank you for joining us in exploring this deep dive into XRP's current state. If you found this analysis helpful and educational, be sure to like the video and subscribe for more insights into the crypto world. What do you think about XRP's vanishing supply? Is it bullish, bearish, or something in between? Let us know in the comments below. Until next time, stay informed and stay safe out there in the crypto markets.